Well, it's been a pretty brutal wake-up call, Betty. Investors pile into stocks, and they are leaving gold by the wayside. Hedge funds are the least bullish in more than 5 years, cutting their net long positions by 9% last week, as so-called money printing by central banks has not led to that disastrous inflation. Money managers pulled over $1.5 billion from gold funds. That's according to money flow tracker EPFR Global. Now, this rush to the exit has ripple effects, causing a spike in gold's volatility. Its 60-day historical volatility touched its highest since 2011. And Betty, any kind of central bank buying that we've seen isn't helping this overall negativity. Typically bullish firm Bank of America cut its 2013 forecast again today by 12%, Betty.
Wow, 12%. Now, I know we look at the metal, but we also look at how gold miners are doing, and they're basically falling from record highs.
Well, the stocks are down while the stock market is at record highs. It's been a pretty terrible year for gold stocks, and really big names in particular like Barrick Gold. Investors have been punishing this stock despite the fact that net sales are close to $15 billion a year. So as more sales don't translate into the holy grail of more free cash flow. Why? Well, those companies are having to spend so much to find more gold that investors now don't seem to really want. And Chile on Friday ordered Barrick to stop working on its Pascalama project in Chile until it solves water contamination issues. Barrick has already poured $5 billion into the $8.5 billion project, which is a huge part of its growth strategy. At the same time, Barrick under pressure to sell assets and combat those higher costs. And all of this means, Betty, a 45% decline in the stock price this year. That's a fall 2.5 times more than the gold price.